So after such a fruitful first session, let's now move to the policy dialogue. As you may see, we already have a number of experts, panelists sitting here, and I don't want to further delay this very interesting panel because already in the first session there were so many interesting questions from several economies in the region here, and I'm sure that those panelists will also be very much in the position sharing their expert knowledge and views on your questions. This session will be moderated by Mamiko Yoko-Yarai. She's a principal administrator and head of insurance of the OECD. She leads the insurance work as well as working on key financial market issues, and she's the principal administrator at the OECD. Her work relates to a number of issues, including insurance and private pension systems, policy guidance on cyber risk insurance, disaster risk finance, insurer governance, market access, technology and innovation, retirement savings, just to name a few. But without further ado, Mamiko will be the moderator, and she will now start, and the floor is yours.
Okay, well, thank you everyone. Maybe before we start, I just want to do a little survey of the room because so we can get a feel, and it'll be easier for the speakers to sort of target depending on the audience. First of all, who are those from the public sector? Can you raise your hands? Okay, great, thank you. I think about 1/3 to half. Who is from the private sector? Okay. Anyone from the academia? Okay, no one. Okay, so last question. Who in their country of residence has felt like disaster has been an increasing occurrence? Okay. Not everyone, but I think there is a majority. Okay, well, thank you very much. So I think one of the things that we need to focus on, and it was already raised in the previous part, was that I think as a result of climate change and climate risk, there has been a number of more frequent and severe disasters. I think that has a very strong bearing on our discussion today. And one of the other things I think is that transaction costs in terms of financing and managing disaster is very difficult to actually finance and invest in. And that has been a challenge for many, many governments. I think the third issue is coordination issues. And this is not only within governments, I think it goes vertically and horizontally, but even for myself, who has worked in disaster risk financing primarily in insurance, when we try to talk to our colleagues who work on disaster risk management, it's not very straightforward. And because, as Oliver mentioned earlier, it is a very much comprehensive, holistic, whole-of-government approach, it makes it even more challenging. And I think many of you will be aware of those challenges already. When we're talking about transaction costs, it's not only about the money that you need to actually invest in better resilience, but it's also about financing recovery. Because as you know, governments are faced with a huge fiscal burden as a result of the disasters. And this is one of the reasons why it becomes very pertinent to discuss this issue. Because because insurance penetration in many countries in this region is very low, it means that the government will have to take over the burden of paying for disasters. And so that's one of the sort of underlying, I think, considerations. And another about the transaction costs is I think there was a question about catastrophic related insurance, the availability of that. And obviously, as Lee mentioned, one of the challenges is that how to get insurance premiums at a reasonable level that is affordable. And this is really exacerbated by the increasing number of disasters, because if you have too many disasters, all of a sudden, your premium levels will become unaffordable. And on a commercial basis, this might be acceptable, but from a retail individual, this might become very much unacceptable, and then you would want to use your money for other things, like a wedding or a funeral, more immediate contingencies. So that's sort of the background, I think, of our discussion today. And I'll start with, so I'm not gonna do the whole profile. I think I'm just gonna introduce their titles because I think you have on your app already their full profiles. But first, my first speaker is Sonu Agrawal. He's the founder and managing director of Weather Risk Management Services Private Limited.
Good morning, all of you. I thank the organizers for inviting me here. This is So we are a technology company which has facilitated development of crop insurance in the Indian market since 2004. We have been working on various kinds of crop insurance programs. We launched the first weather index insurance program, scaled it up, then launched different kind of yield index, satellite index programs, which were then picked up by the Government of India to launch or to frame their national crop insurance program. As part of our crop insurance program, we have a technology platform which is supported by over 10,000 sensors, weather stations, soil moisture sensors spread across India. A few of these stations have been installed in Philippines also 6 years back. We have surveyors who crisscross across the country, 2,000 surveyors. And various kinds of all kinds of satellite missions which are integrated with our platform, which help us to monitor crops in various parts of the country. We started with a weather index program back in 2004. This is how a weather index program looks like, and many of you must be familiar with this. So it's a simple parametric program where if the rainfall or temperature is below a certain threshold, then the payoffs go off to the farmers. I'll not go into too many details, but the problem in this kind of approach we faced was that there is basis risk. Sometimes farmers won't get payments, when they have losses because these triggers have these parameters, the payoffs for which have not triggered. And at the same time, these are costly because we are not able to integrate crop care practices in this structure. There are new technologies through which farmers can take care of risk, but this parametric framework does not allow you to capture those developments effectively. This led us to develop what we called the comprehensive risk management framework, which means that you give parametric insurance programs, but at the same time also give advisories to farmers. This was something we also tried out in Bangladesh with ADB, where we did a small pilot program and covered 12,000 farmers based on this framework. But here also, the problem was that insurance companies do not give discounts on the basis of these advisories. The premiums are not less because they are not sure whether the farmers are following the advisories which are given. And for the farmers also, it's not sufficient. The advisories are not sufficient because these are at best village level advisories and they need farm level advisories, which we are not able to do in this framework. It's stuck. Yeah. So this has led us to develop a new product which is now working, scaling up very fast in India, where we guarantee a farm level yield to the farmer. Instead of guaranteeing a weather parameter, we guarantee a farm level yield should the farmer follow the technology or the practices which are recommended by us. So there is no basis risk. Farmers are paid losses when they suffer losses. So the insurance companies can give discounts because they are sure that the farmers are using the latest crop care technologies to manage risks. Plus for the farmers also, it's like not only a risk management, but an effective technology framework which helps them improve their farm level yields. This requires a comprehensive agricultural risk management, right from soil management, water management, crop care, post-harvest management. So this framework includes all these aspects. But before I explain that, I will just share the basic contract with you, where the farmers are, as you can see in this contract, this is an example contract, where they are guaranteed a yield. So it says 8 tons per acre for potato in Bengal. And if they follow the recommended practices, if they treat their soil well, if they undertake the required crop care practices, the guaranteed yield increases in a stepwise fashion. So if he does the soil management, his guaranteed yield increases to 9. If he does crop care, it goes to 10. And so there is an incentive for the farmer to really manage his crop well. So you must be wondering, how can you manage this farm level risk management at such a large scale? Well, the answer is technology, where now through satellites we can monitor what's happening on each field. Now there are cadastral maps which have been developed by governments, where you can then link the geotag of a field which you're observing through satellites to the KYC of the farmer. You know exactly to whom does this plot belong to. I talked about soil management as an integral part of assuring yields. So again, technology helps. Using satellites, you know what is the basic soil profile, and through artificial intelligence, you know where exactly the problem could be, and then you can monitor those soils, the soils of those farms more effectively. We use a lot of mechanization. These are instruments which are made available to farmers on rent. Advantage is that A, these instruments are more precise. B, I can also track what is happening on the farm. So if I know the farmer has planted his seeds well, I know he's eligible for a higher yield. Likewise, I can see whether the farmer has irrigated his fields properly or not, and I can give him those incentives. Crop care, again, there are IoT and AI-enabled pest and disease forecasting programs through which we know if there is a certain pest attack, we can advise the farmers. There are machines which are then sent to the fields to monitor or to deliver crop care, to spray the farms with the required chemicals. There is and the important thing is that the weather-related risks are hedged by us, not the farmer. So this takes care of the basis risk. With your permission, madam, can I take half a minute more? Yeah. So this is the key feature, that while we are assuring yield to the farmer, this is what matters to him. The weather-related risks, they are taken care by us, and we can manage the basis risk through, since we have a larger portfolio which is spread across the country. In West Bengal, where we did a large-scale pilot with about 10,000 farmers, there is over a period of 3 years, there is an improvement in yield by 10%. There was consumption of less water, because here the important thing is that the farmer has really an incentive, because he's guaranteed a high yield, to adhere to sustainable practices. If you recommend him that you use less water, he is willing to take a chance because you have guaranteed a yield. So this is the new kind of program which we have brought in, and I think which will scale up with technology. Thank you.
Thank you very much. I was wondering about the basis risk, so I'm glad for that last explanation to be added on. Okay, so next I would like to introduce Paola Alvarez. She is the Assistant Secretary of the Department of Finance of the Philippines.
So good morning, everyone. First, we would like to thank the organizers for inviting me to have gender diversity in the panel, and for everyone for being here. So we actually want to also thank Oliver for sharing his paper. This is actually one of the priority areas in the DRFI working group, in the APEC working group. So this is one of the priorities which was actually endorsed by the finance ministers for the 2020 work plan. So just a quick background. Okay, so a background of the Philippines. So the Philippines is a highly vulnerable country in terms of climate change and disasters. We are geographically located within the Pacific Ring of Fire and within the Pacific Typhoon Belt. So we generally experience around 13 to 18 typhoons a year. And based on historic data provided by our Science and Technology Department, the intensity and the number of typhoons that we're actually facing is actually becoming stronger every so often. So to illustrate, The past few years have demonstrated the country's vulnerability with typhoons Ondoy, Pepeng, and Pablo, which the international names are in the screen. So they claimed over 3,000 lives and affected 10 million people and caused economic damage and losses amounting to approximately 256 billion pesos or $5.77 billion. Super Typhoon Yolanda, or Haiyan, alone claimed 6,201 lives and has cost economy around 571 billion pesos or $12.87 billion in damages, hampering economic growth by about 0.9 percentage points in 2013 and another 0.3 percentage points in 2014. So, based on our historic data and based on our science and technology department, the Yolanda-like typhoons are now becoming the new normal. And the Philippines has a lot to prepare for because on a long-term average basis, the Philippines is expected to incur 177 billion per year in losses to public and private assets due to typhoons and earthquakes. In the next 50 years, the country has a 40% chance of experiencing a loss exceeding 989 billion pesos and a 20% chance of experiencing a loss worth 1.5 trillion pesos. So, what has the Philippines been doing? So, based on policies and laws that were enacted is first the Philippine Development Plan. So, this is an economic program created by our Economic and Development Authority. So, they have now incorporated climate change and disaster risk planning in all areas of government. Like different chapters relating to transport now includes climate resilient and disaster resilient transport. For infrastructure, our public works and highways are now finding ways to retrofit government bridges and other government infrastructure. So in all the aspects of the government, climate change and disaster risk are already being included in the planning. So we also have the DRR and climate change plans. So these are mandated under the law. So we have the National Disaster Risk Reduction and Management Plan. So this provides the overall framework on how local governments, the national government would interact in terms of disaster risk planning and management and how they should incorporate policies and other budgeting concerns and economic planning in relation to disaster risks. So on the other side of the plane, in the Philippines, we're trying to incorporate both disaster risks and climate change because they don't live in a vacuum. So in the Philippines, for us to lower the risks of disasters, we have to invest more on climate change adaptation and mitigation. And at the same time, for you to attract more sustainable investments, let's say for renewable energies, for waste recycling plants, and all the other sanitation and other areas that we need for NDC targets, you also need to lower your disaster risks through insurance and other types of risk layering procedures to make it cheaper for both and to entice investors to come in. So they both interact. So for our DRFI strategy, we layer them to national, local, and individual level. So I think there was a question a while ago about the insurance penetration and parametric insurance in the Philippines. So first, on the national level, we have different types of layering. Like number one, we have the catastrophe deferred drawdown loan. So it's a standby loan facility that in times of calamity, like maybe a Typhoon Haiyan event, where the President declares a national state of emergency, we have the option to draw down from this loan to augment our budget. So on the local level, I think what you were trying to ask a while ago is the risk pooling mechanisms that we try to do. So for parametric insurance, we have two types. The first encompasses provinces and government infrastructure, mostly roads, bridges, and hospitals and schools. So we did the province type and the agency infrastructure because when we incorporated this in our planning, not all local governments and national agencies knew which infrastructure they own. So just to get rid of the confusion of who owns what infrastructure, like a public hospital could be owned by the local government or the Department of Health, to go to get away with the problems of ownership, we just included provincial levels and individual agencies. So, okay, so the PCDIP, the Philippine City Insurance Disaster Pool, this is the one we developed with the ADB. So what we did with disaster insurance pools is also with the same type with the provincial. This one is for cities. We pulled in the different risks that attaches to the different provinces in order to make it more diverse and to make it cheaper for them to get insurance. So we already have the provincial and government infrastructure parametric insurance in place, and we've actually had 2 payouts from it in the past 6 months. So for the PCDIP, one of the things that we encountered was that because parametric insurance and pooling of risks is a new form of financial tool, our laws didn't have any provision where we could house this type of feature. It couldn't fall within our insurance commission, it couldn't fall within the finance department, and the government service insurance system had no mandate to hold as trust. So it's something that we're working with our legislators for them to allow us to do. So on the individual level, what we're trying to do is to increase penetration of microinsurance for MSMEs and for farmers in a parametric type. Because based on experience during Typhoon Haiyan, most of the MSMEs that were able to get back to their with the daily operations of their business were those who availed of microinsurance. So microinsurance penetration in the Philippines is quite bigger. We want to develop the same form but for farmers and fisher folks. The same pooling of resources or of risks to make it cheaper for them. Like for example, if we could pull in enough risks at a certain province for farmers and fisher folks, maybe they can avail of the premium with $1, that's 50 pesos, and then they could have a payout, let's say, of 5,000 pesos. It's quite small internationally, but for farmers and fisher folks, it's enough for them to buy materials to reconstruct their house or their boat or their daily livelihoods. So in relation to this, because we're trying to embrace technology and how we could harness technology for disaster risk financing, we have come up with a GeoRisk Philippines. So this is a web application created by our Department of Science and Technology. So the GeoRisk Philippines provides GPS and hazards and other risks that attach depending on where you're situated. So it's a tool for GeoMapper, it's a tool for the government to plan and to see in which areas what type of risks attaches. So the Hazard Hunter is more for the individuals, like if you live in the Philippines, you could go online, go on Hazard Hunter, check your office or your house, and then see if you fall within a fault line or what risks attaches to where you're standing, or it's a way to help also businesses plan for which insurance they need more. So another one is the National Asset Registry System. So our treasury is now starting to make a catalog of all government infrastructure, and how it works is that, for example, your different government agencies like DOH, the health department, the transportation department, they log on and then they list which hospitals they own and then where it is situated, if it's covered by insurance, what risk attaches to it. So at the same time, we can cross-check if they have ample insurance to cover government infrastructure. So long-term goals for resiliency is now we're lobbying in Congress for the Department of Disaster Resiliency, which will be a department that will just work for mitigating and preparing for disaster risks. And another one is the creation of a sustainable finance interagency group, so we can mainstream climate finance in the whole of government. So thank you.
Thank you. Let me just highlight that Philippines is actually one of the leading countries in actually having, and I think it was demonstrated well in terms of having a whole of government approach and establishing a disaster resilience act. I've never heard of that, so that's actually really encouraging and very interesting development. So next I'm going to go to Mr. Guillermo Luz. He is the Chief Resilience Officer and Advisor for the Philippine Disaster Resilience Foundation. And I guess you're a member of the Asian Business Advisory Council as well.
Yes, exactly.
Yes, exactly.
Thank you.
Good morning. Thank you to ADB and OECD for inviting us. My name is Bill Luz. I represent the Philippine Disaster Resilience Foundation, or PDRF, and I'm also a member of the APEC Business Advisory Council as an alternate member for the Philippines. I'd like to speak a little bit about the private sector in the Philippines in disaster risk management. So we are not involved in disaster risk insurance, but our thrust has been in reducing in focusing on disaster risk reduction. So those of you familiar with the Philippines know the risks and hazards that we have faced here. So we've had earthquakes, volcanoes, floods, earthquakes again, and super typhoons, in this case Yolanda in 2013. And also we look at pandemics, and that was the other area. So for the moment, for PDRF, we focus on the natural disasters, and we are not yet up to speed on pandemics. So we set up in the private sector our own emergency operations center with 3 goals in mind. We felt that in order to reduce risk, we needed better coordination within the private sector in the Philippines, and across from the private sector to the government and the private sector to international humanitarian organizations. The second goal was we needed to improve the capacity, build up capacity, and empower private companies to become more resilient themselves. So this started with their own staff and management. And then goal 3 was working with their supply chain, the SMEs, because in this country, 99.5% of establishments are really MSMEs. We built it around what we call a cluster system. So just like the government and just like the international system, which has committees or clusters, they have 12. In our case, we focused on